And when we went back to the chart, and this is where it made that big profit. Because remember, how EazyBot works is that it will look at the highest point of the market and try to sell at that specific point. Going back again to that previous slide, look at this time. It was this trade was closed on 7th of July at 8:18 p.m. And you can go back to the live chart and see that on your own eyes. And this trade have started on the same day, 7th of July, at 8:14. So it's just a matter of 4 minutes and it closed with more than 5% profit because the market have just jumped up. This is a 3-minute candle view. So the trade started at, this is the candle, the trade started at this point here at the low market point, and then the market shooted up. It was supposed to close as just at 1% or 1.5%, but it actually closed at 5%. How did that happen? Because the market really jumped up, and this is the highest point of the market, and then the market sold here. It has to retrace. It's always following the highest point of the market with an imaginary line of 0.5% below that, and this is where it actually closed. It followed the market until it reached to the highest point, and then started moving down and then closed here. And that's how it made over 5% instead of just 1%. And that's exactly the time where it was done. If you I don't have the line here, but this time here is exactly at I think 6. The time, yeah, it's 8:18 p.m. You can look at that price. It's the price of 1.032 of the coin of CRV. This time we're talking about CRV. Okay, so this is about the first topic that I want to talk about. The second one is we want to look at the pulling down the average price. We've been always looking at that. The main differentiator between EazyBot and the other bots out there is that if you open a trade at the price of 100, there is a big possibility that it can close this same trade that opened at the price of 100 at the price of 50 or even lower and still make profit. And that's what we call is pulling down the average price. The first 3 covers on the top, or the first trades on the top, are taken as average price, and everything else down there is independent covers. So 50% of that profit of the independent covers is used to pull down the average price. So this trade, if you have seen it before, it was like 180 something when we saw it last time. So today the average price is 170. Let's analyze a little bit. This trade or this cycle have started at the price of 251. This is AAVE, and that was on 3rd of April. Sorry, 3rd of April. And then the market went down and so on. Right now, or yesterday, the price was as low as 77. 77. So we're talking about more than 70% drop, or like 70% drop of the market, and still the bot's working, making profit. The average price when it took the first 3 trades on the top was just 225, the average price. So what happens now? The average price have really moved down and reached to 178.78. If you look at it today, it's lower than this, but I'm looking at yesterday because this screenshot was taken yesterday on 10th of July. So the price was 178.78%. So how much is that? That's and right now, while the market is down and this trade is not closed yet, it has made a profit of already 670.44 USDT. Just to an important note, as you can see down, you can realize the whole profit once the whole cycle is closed, and we're helping the cycle to close faster by using that 50% of the profit to bring the average price down and close the whole cycle. Let's calculate this profit or this drop down of the market. It dropped from 225. This is the average price, which was started on the top, 125, and came down to 178.78. So that's a total drop of 46.22 USDT. In percentage, that's 20%. So that 20%, the average price was here. We're working as the market is going down, buying and selling, 50% is used to pull that down, pull it down, pull the average price down, pull the average price down until it reaches now to more than 20% drop down of the market as we speak. And as the market continues dropping or continues fluctuating, it's going to keep on pulling down the average price until eventually the average price is going to be meet with the current market price at any point of time, plus 1.5%, and close the whole cycle, realize the whole profit, and start all over again at that point of the market. So this is about pulling down the average price. Let's look at the account performance. I have shared this account 2 weeks back. That was exactly on 24th of June. If you look at the top, this is the old readings, just so that we can compare the old readings with the new ones. This is the old one, and this is the old result. Also, if you see, the account have made in 34 days about 5.38%. Different coins gave different results. The superstar was unique. UNI USDT gave the maximum profit of 10.97%, but overall the average profit is 5.38%. Let's look at the new records. This is the new as of yesterday. If you see, the numbers are different. We're going to see now a comparison between the accounts. So this is the performance of the account of 50 days, that the total duration. So the profit have increased to 7.44% in overall. Let's have a comparison on side to side. This is the previous one on 24th of June, where the superstar was unique, made 10.89%. And this is the new records as of yesterday, of 10th of June. So we're talking about approximately 50 days performance of this account. The total profit have increased from 5.38% to 7.44%. There's something here that you really need to look at, is that our superstar have changed. So it's not anymore the unit is the one that's giving the maximum profit. Now it's Matic, and it made over 17% in profit. Now, this is very important, guys, because you will never know which coin is going to be performing better than the others in the future. So the best way to choose the coins is to use as many coins as you can. Looking at the past and choosing the coins based on the past might not be a really good idea, because you don't know how the coin is going to be performing in the next couple of days. If you see the Matic, last time it was just 6.24%. So it wasn't even in the second or the third position. I think it was third or something like this. So between 24th and 10th, it made the difference between 6 and 70, more than 10% in just 2 weeks, more than 10%. So I would never know that which one is going to be performing better. Maybe next week we're going to see a completely different story, another one which is not even in the top. Maybe will jump up and give us small profits. So it's really wise, if you are investing like good amount of money, like 5,000, 10,000 or more, spread your money among all the coins that are available. That will reduce your risk, and also might increase your profitability, because you don't know which one is going to be performing better, and will give you a kind of sustainability in profitability. It gives you like sustainable profit, or always you'll have profit. If some coins are not performing well, other one will perform well, and then you keep on getting the profit. The other thing I want to talk about, this is something that we have been talking about long time back, since the beginning, but we have never shown case. We have never shown that how EazyBot is sustaining more than 50% drop of the market, how the default strategy is sustaining the more than 50% drop in the market. We haven't seen it. I have seen it myself, but I haven't shared that with anyone. So this is the time, I think, to share it with you. So we're going to talk specifically about this coin, the Ethereum. This has been trading from 4th of April. If you can see here, it started when the price was 3,560 at that time when we started this cycle. And then the market kept on moving down, moving down until it took the last cover, which is the cover 35. Based on the strategy, the previous strategy, as you know, we had 35 covers, and we said that 35 covers would sustain more than 50% drop of the market. So cover 35 was taken at the price of 1,476.8. So in this coin, we have not added any additional funds. It was only the initial funds, and the market went down. It kept on buying in the market, and then stopped at the cover 35. And let's calculate now how much is that drop. So I made a couple of equations here. I hope it's simple to everyone. So when we started at the price of 3,560.55, which we can see here on the left. And then the market went down, and then the last cover of cover 35 was taken initially at the price of 1,476. So that's a total drop of 2,083.71. In percentage, compared to the initial price, that's a drop of 58.52%. So that's exactly more than 50% that we have been talking about. And it could be actually 60 or 70%, depending on how the market is fluctuating. Remember, we have something called cover pullback. Cover pullback is basically a protection. When you are trading, you don't know if the market is really in a disaster and it's really running down faster. If the market is running down really rapidly without having to pull back or having to move back a little bit, the bot's not going to buy anything. It's going to wait for the market to start pulling back a little bit and then start buying in the market. And that what helps it to sustain even more than 50%. The minimum is 50%, but it can go more than 50%. As you can see, this is live example. It sustained up to 58.52%. It could be more, it could be lesser than this, but the minimum is about 51%. That's all what I have today about the on the slides. But there's one more thing, as David was sharing, is the enhancement of the default strategy. Right now, the default strategy has been doing very well the last couple of months, and I think everyone is happy with that. However, it has one small gap that we have shared last time. It's not a gap, but it's some point of improvement, I would call it this way. If you remember, we have cover 1 and cover 2 and cover 3. In between cover 1 and cover 3, when I say cover, it means a trade. When the trade is going to be taken, we call that cover. So between cover 1 and cover 2, there is a gap of 5%. So unless the market goes down 5%, it will not be doing any movement in the market. It's going to only buy when the market goes down the 5%. And between cover 2 and cover 3, there is a gap of 8%. So if the market keeps on fluctuating between cover 2 and cover 3, it's not going to buy anything in the market. It's not going to sell anything because it's not in a position to sell. It's not in a position to buy. So what we did in the default enhancement of the default strategy is that we tried to breach that gap and add more independent covers in between. If you know what independent cover means, you'll understand very well what I'm saying. So I'll share now a little bit of results that what we have seen in that enhanced strategy. It's already been implemented on the testing server. So I'm testing on there. It's been like 3 or 4 days I'm testing that. So I'm going to share with you now what happened. A second, share screen. Okay, I hope that you can see my screen now. So yeah, this is the test account that I've been testing. I'm going to look specifically on the link coin here. So on this coin here, if we have been using the old strategy, not the enhanced, here, this is the enhanced strategy. I don't want to go in details about how the covers are working, where it takes the cover, where it sells, but let's talk about the results. Talking about results, if we were using the old strategy, the profit that would have been made in this specific cycle would be as low as 0.184%. But actually, because we are using the enhanced strategy, we're using some independent covers in between the average covers, it made as high as 0.4478%. The numbers might look small, but look at it from percentage point of view. Let me just pull out the calculator and just make a small calculation for you. Yeah, so all of these profits here, this profit is made because of the enhancement. This profit also being made because of the enhancement. This profit is made because of the enhancement. This profit here is the same as the old strategy. So let's compare numbers to numbers, or apple to apple. So the additional profit that was made here because of the enhancement is 0.0478 plus. Then the next one is here, 0.09429922 plus. The next one is 0.121708. So this is the additional profit that was made because of the enhancement. So let's compare it in percentage to the amount that would have been made if we're not using the enhanced strategy, if we're using the old one. So we divide this amount by the profit that would have been made by the old strategy, which is 0.184077. So we're talking about additional profit of 143%. It's not 143% of the capital, it's 143% of the previous strategy result that would have been made. So I'm comparing like 2.22 to 0.18. So this is the additional profit. Let's look at another cycle. This is the current cycle that's ongoing at the moment. This is not closed yet, but if we were using the old strategy, we would have not seen any profit yet. But because we are using the enhanced strategy, we're seeing this profit and this profit and this profit and this profit. So total profit of 0.2274 is just made because of this enhancement of the strategy. Let's look at that in terms of percentage over the capital, because we don't have the old strategy would have not been making any profit so far, so we cannot compare to that one. Let's compare it to the capital. The capital invested in this coin is 300. So we're talking about 0.22740828 divided by 300, multiplied by 100. So I've just made additional profit of 0.075%. It's a small percentage, but as bigger the capital is, it's going to be bigger amount. So this just wanted to share with you a little bit of an insight about the new enhanced strategy. If you are technical, you can, I will just share a little bit about the technicality of how it works and how it's going to be looking like for the people who are actually using their own settings or their own strategies. They can get use of the new enhancement that we're doing, because we're allowing them to do even more now with the bot. First of all, they can choose a percentage of the amount that they want to use. Instead of 3.34%, they can choose only 3%, or they can use only 2% and still use the auto compounding if they want. What we're given also here is that people can actually choose which cover they want. They want it to be independent or average price, or average cover. Let me just go and try to create a new button just to show you. This is only for the people who are interested on making their own settings. So you can just jump in here, unlock the default strategy or untick it, and then you can just come down here and change. Now, right now, this is average, this is average, this is average. You can change this from average to independent. You can then change this from average to independent. If you want, you can make the average somewhere down here. Like this is the average. You can change the percentage of the drop if you want, make it -4% instead of -5% or -2%, -8%. You can just play many places. And also very powerful thing that we have allowed for here is that you can also change the percentage of the profit that you want to use to bring down the average price. So the default is 50%, but if you want to increase it, if you want to decrease it, it's up to you. So let's say you can make it the profit. This is the profit kept. You can make the profit kept up to 10%. So in this case, for this cover, is going to use 90% to drop down the average price, and 10% will be kept to you as a profit. So this is an additional feature that we're keeping here. You can have also more average prices in between if you want. Average price, that means once it hit the average price, it considers everything above that as average price, average position. One position have one break-even points, and as the market goes down, it's going to be taking independent positions.